My goal of today is to free up enough capital to make a Apple spread. So I'm going to take you live through trying to place my first spread. Real quick, I'll tell you about this account. This account started with just about $1,500 in early July. This is when I started looking up options. And as of right now, it's at $2,500. I just deposited $90 yesterday because I wanted to make a trade, but that didn't really go through. But yeah, I just want to hold $1,500 in this account. I don't want to put any more new money, is what I'm saying, because this is my testing grounds for making sure I know how to do options. A lot of my expiry dates are very far in the future, so it's a good chance that I will be in the money at certain points, and it's just about me not getting too greedy. I also am holding a couple of shares. These are just for fun. I'm not always playing with this full amount of money, but I think I'm going to sell a Fiverr share today just because I want some money to do that Apple spread. So see total return 1862. Yep, that's fine. I'm just gonna sell it. And because I did it as a market order, it was placed pretty fast. And that frees up my buying power again. So now I have $276.79. And now let's do a debit spread. So I think I misspoke. I don't want to do Apple anymore. I actually want to do Amazon. I don't even think you can do debit spreads right now with Apple. Okay, so as of today, Amazon is going up. And when I'm doing a debit spread, I am hoping that the price of the stock continues to go up. So let's look at its monthly and yearly charts. Amazon is definitely going up. It experienced a dip when everything else crashed a little bit, but there's no reason for it to drop down. It's one of the businesses that has been completely illness proof. It's only gone up. If I look at the weekly, there are definitely little dips and stuff. It drops as low as 292 this week, but based on this trend, the lowest it's been in the past day or so has been about 2330. So let's just see how much that costs. So I will sell a call at 3360, and then I will buy a call, just one strike price underneath. The total cost will be $250, so 2.5 times 100, and this is constantly fluctuating. My max profit is the difference between the strike prices, $5 times 100, $500 minus this. So I am risking this much, about $250 to make $250. And that's pretty good. At least it's a 1-to-1 ratio, and I'm making the assumption that it'll continue to go up. But let's say we cancel that. Let's see how much this is worth. If we're selling a call just under here, and we're buying a call here. Wait, sorry. Buy a call here and sell a call here. See, it's a little bit more expensive as it's getting away from its current price. And I'll do one more example of how far away from in the money we can get. Sell a call. I mean, we're getting more in the money, buy a call. Yeah, so 300. So the more in the money you are, the pricier it is, and you're still making only 500 gross. And once you minus that out, it just doesn't make sense to risk, let's say, $300 to make $200. That just mathematically, you're going to be down all the time. So you want to find at least a 1-to-1 ratio, and that's going to be when you're close to this price. So let's try it again. And this is the important thing. If you don't see a good opportunity, don't force it. Don't make it happen, because then it's just not a good opportunity and you'll just probably lose money. Okay, this is a decent, but I don't know if it's going to go above 3,365. I mean, it might. Okay, I'm just going to do it. These are notoriously hard to fill because the price fluctuates so much. You can set your limit price, and generally it's recommended that you set it higher so it fills. But you see, it's changing. It's trying to give you the best deal. These options have a $1.85 bid-ask spread, so it's a really high bid-ask spread. Okay, let's just do it. It's forcing you to enter a limit price, which is good. You should not just let it autofill stuff for you. You need to know what you're doing. Let's submit. So this is how much it costs. That's the max amount of money I could lose is $240. Okay, let's see. So it's pending right now. Yep, it got filled. It probably wasn't, that was a decent price, $235. Okay. So now we just wait for the August 28th expiry date. If on that date the price of Amazon is above $3,365, I will get $500 minus the cost of this contract, which was $235, I believe. So $265 will be my profit. I am roughly risking $1 to make about $1.1. So the odds seem pretty good, and this is for Amazon, which has been going up for a while. I think this is one of the best and safest ways to make a consistent income, even though it's still a little bit higher risk than other types of plays. This is definitely one of the lower risks just because your losses are fixed. You know exactly how much you could lose and not a cent more, which is good. So now you can see here in my positions, this has come up, and yeah, the price of this is constantly changing. It's fluctuating up and down, up and down. If you don't have the stomach for these huge fluctuations, don't play options or build up the stomach for it, because this is very, very common. And initially, it was driving me crazy because I wouldn't know if I should hop in or hop out. But now I've made my decision. I am not going to dwell on it. I'm going to turn this off and look at my longer term investments and just plan long term, because I've already made the play. And yeah, that's all I really wanted to show you for today. Please follow this channel if you want to see me make actual trades live and not just talk about theory. I'm still learning. I'm a Squire, so this is an opportunity for all of you to learn with me through my mistakes and my gains. And we all have to see how much this stock right here blows up. So yeah, thank you all so much for watching.